Hey, it's T Rob here with the Biz Pulse, and we are going to be talking about 8 ways to finance a startup. So tune in. All right, T Rob here with the Biz Pulse. Welcome back. Um, we have been talking about startups in general. We've talked about different types of startups. We've talked about are you ready for to start a business? So it's only natural that now I wanted to talk about 8 ways to finance a startup. And these are, there's a bunch of different ways to finance a startup. So these are just 8 that I'm going to cover. Uh, Again, these are very, very brief, um, descriptions of me covering them. But reach out if you have questions about it or need me to cover, one in particular more. So let's get started. Let me bring this up here real quick. So 8 ways to finance a startup. The first is personal finance and credit lines. And it sounds kind of straightforward. A personal credit line is a loan you take out with the maximum limit from a lender or a bank. You can then access the funds in these lines of credit anytime in the amounts that fits your needs, as long as they don't exceed the maximum amount you agree to. This is a great option if you're a startup or new business that needs uh, cash fast to pay for everyday operations. However, if you decide to take out a line of credit, you'll have to make timely payments with interest. Um, Credit lines are the easiest way for small business owners to get startup funding, as long as they have reliable source of income, a good credit score, and positive credit history. Um, you should be okay. That's a personal finance credit line. Number two is family and friends. In the early stages of startup in your business, finding the right funding is stressful. I mean, it's one of the biggest things you're gonna struggle with, and sometimes the best option is for friends and family. Borrowing from them can be, you could potentially pay a lot lower interest rates than compared to a bank. This can help reduce the overall debt level, so you can put more cash back into your business. However, it's important to be aware, and I want to say this again, that conflicts can arise over loans with friends and family. Anytime you're dealing with money, it becomes a little iffy at times. So be careful with that. Number three is business loans. Another more straightforward option for financing your startup is to get a small business loan. If you decide to get a bank loan, you'll need to get organized and know your credit history. Um, it's also important to be transparent as you work with lenders for a loan. They want to know exactly why you need it, how you plan to use it, whether it's for everyday expenses or support of your business structure. Um, so with this being in mind, banks are a good option if you have collateral, good credit. You don't need cash like right then. Nonprofit micro lenders, if you can't get a loan from a bank because your startup or company is too small, you can seek out smaller lenders to help. Online lenders, if you don't have collateral and need funds as soon as possible, you can look online for investors and startups. Uh, and probably one that I push people towards a lot is the Small Business Administration, the SBA. There's lenders that work directly with the SBA, and these are built for small businesses. So they're typically really good programs, and they work very well. So um, you can also get a business term loan. These can help pay for one-time investments for your operation. They're kind of similar to student loans or a mortgage, offering like a repayment over a period of time in equal installments. You can get these loans from banks, credit unions, or other lenders. Before you request financing in any way is, and I'll touch on this later, but right now I'm going to touch on it again. Writing a business plan is a huge, huge, huge thing. You have to have a good business plan. Your business plan should have financial numbers, your growth plan, a mission statement. It should cover your products or services and your company's leadership and team. Um, and we can go deeper into that and maybe in another video of how to write a business plan and what should be really included. Number four, angel investor. And some people are like, oh, what the heck is that? I want an angel investor. Oh, sorry. Um, Angel investors, or these lenders are also known as like private investors, and can offer you your startup the capital it needs to get off the ground, but it comes with a catch sometimes. Angel investing works by offering you money in exchange for stake in your company. So this improves your chance of being successful and getting your money, but you're going to lose control of the company. And some angel investors do want to make some of the business decisions to protect their money. They'll also receive a portion of your profits if you sell your company. So keep that in mind. If this trade off still sounds good to you, then your next step is to catch their attention. To do this, you'll need a clear business plan. We just talked about it, that outlines the market opportunity for your products or services and the potential for your company to grow. They really want to see growth potential. Okay. It's also important to be really well versed in your marketing and PR strategy, as well as your financial numbers. I mean, it's kind of like going on TV or something, a Shark Tank, where you have to know all of that. Number five, get down here and change that one. Oops, sorry about that. Is venture capitalist. Venture capitalists are private investors that offer financing for startups or small businesses. Typically, these lenders are partners in limited partnerships and invest in one venture capital fund. So it'll be a bunch of people coming into a venture capital fund. A commission will then manage and make investment decisions for your funds. Sometimes that is not good. You have too many people that are involved, and other people want to make decisions on your business. If the group does decide to back the startup, they'll give them money in exchange for stake in the company's equity. So that, just keep that in mind. That's venture capitalist. Number six is crowdfunding. This is something that's very popular. Um, Still, I mean, it was huge 2 years ago, and it's still a ton of places out there. So where your working capital needs to improve, or you need to increase your cash flow, hosting a crowdfunding campaign could help. Um, what this is you raise small amounts of money from a very large number of people. In most cases, they're held online on popular platforms like Kickstarter or GoFundMe. Um, Here's some tips on just crowdfunding, and know your audience. You want to target like the group or the people's interest. This can help you focus your efforts and use resources more efficiently. Promoting your campaign. So once you build that campaign, you got to promote it. Social media is a huge one. Make sure you're using your social media outlets. You can also host an event to help publicize your cause and engage the people. Picking the right platform, you'll want to research online sites that fit your industry and niche. There's a ton of them now, so definitely do your homework. And then probably one of the most important is creating marketing materials that includes using both digital and print advanced, like to use to really blow people away, I guess, with what you're trying to do. So just keep in mind, if you're crowdfunding, you're Mickey Mouse on stage. I mean, you're putting on a show. Number seven is Startup Incubator. And a lot of people have never heard of this. Sometimes this is the best strategy for creating a business model for your startup is basically to work in collaboration. Startup incubators offer facilities and support to early stage companies. While they're there, you might access, experts in a certain field. You'll get mentorship potentially, tools like equipment, maybe legal and accounting help, things like that. Uh, as you research and narrow down that potential startup incubator, it's a good idea to interview other startup founders. So if you find one, ask the company, hey, do you have anybody that I can talk to for reference, and just see how it went with them. And last but not least, probably one that most people don't do a lot of digging because it's sometimes hard, is government grants, free money potentially. So seek out those government grants, and it's free money for businesses. And I know it sounds like a dream, or like, yeah, right, but with government business loans and grant, it doesn't have to be. Many grants are specific to industries or demographics, though. That means some may only be for startups, maybe science, technology, health. There's, women owned, minority. There's lot of different, grants out there that you would definitely want to look into, because it potentially could be free money to help you get off the ground. Um, I think that's it. That's eight of the ones I wanted to cover. Again, there's a bunch of different ways to finance your startup. I urge you to do research and really study, how you want to do it, what best fits you, because, like I said, there's so many different ways that you, as a startup company, as a business entrepreneur, can finance. And if you pick a company, do a lot of research on them. But the biggest key I want you to take from this is your business plan has got to be top notch. You got to know your business better than they do. If you don't know your numbers, if you don't know your competitors, if you don't know your finances, you're going to have a really hard time getting financing. So hopefully that helped you. Make sure you come back and check out my channel. Please like, subscribe, and we appreciate it. You guys have a great one.